Accounting equation. How to teach accounting equation, or basic accounting model. Assets equals liabilities plus owner's equity, A equals L plus O. Accounting equation. How to teach accounting equation, or basic accounting model. Assets equals liabilities plus owner's equity, A equals L plus O. 1. In teaching the accounting equation, A equals L plus O, learners should first know the following. What is an asset? What is a liability? What is an expense? What is an income? What is owner's equity? Assets include everything a corporation owns or everything that is due to it. Liabilities, what your business owes creditors. Owner's equity, the amount of money the shareholders have invested in the business. Expense, an expense is an outflow of money to another person or group to pay for an item or service, or for a category of costs. Income refers to consumption opportunity gained by an entity within a specified time frame, which is generally expressed in monetary terms. 4. The following are examples of items classified as assets: cash, stock/inventory, investments, accounts receivable/debtors, prepaid expenses, vehicles, land, buildings, equipment, furniture, and fixtures. Intangible assets are goodwill, copyrights, trademark, patents, and computer programs. The following are examples of items classified as liabilities: bank overdraft, accounts payable/creditors, accrued expenses, e.g. insurance accrued. Prepaid income, e.g. rent, received, prepaid bank loans, long-term liabilities, mortgage bonds, debentures. The following are examples of items classified as expenses: insurance paid, rent paid, water and lights paid, discount allowed, stationery paid, petrol and oil paid, purchases, telephone paid, interest paid, income tax, VAT. 5. The following are examples of items classified as incomes: rent received, discount received, sales, interest received, retained income/net profit. Owner's equity is made up of paid-in capital or share capital, the original money provided by the shareholders, retained income/net profit. T. Account base. Accounts are a summary device that record the changes that have occurred during a period. O. Organizational system for businesses that allow them to analyze the cumulative effects of transactions. O. Each account shows the effect of all of the increases and decreases during a period. Accounts are organized via the basic accounting equation: assets equals liabilities plus owner's equity. Use a separate account for each particular O asset, O liability, O shareholders' equity, owner's equity that is involved in a transaction. Each transaction will affect at least two accounts. This is reflective of the double entry system used in accounting, which keeps the accounting equation in balance. Two characteristics of double entry systems are: each transaction is recorded in two accounts, and each account has two sides, debit and credit. Two entries are made for each transaction, one entry as debit in one account, and the other entry as credit in another account. The two entries keep the accounting equation balanced. 6. Assets equals liabilities plus owner's equity. Therefore, the combined debit balance of all accounts always equals the combined credit balance of all accounts. Double entry system means that we record dual effects of a business transaction. Therefore, each transaction affects at least two accounts. In accounting, accounts can be represented by the letter T and referred to as T accounts. Accountants designate O left side of account equals debits, O right side of account equals credits. Total debits always equal total credits. Debit, an entry affecting the left side of a T account. Credit, an entry affecting the right side of a T account. Visualization of the T account. Account title. Rules for asset. Left-hand side of the accounting equation. O assets have a normal debit balance. Asterisk O increases in assets are recorded on the left, debit, side. O decreases in assets are recorded on the right, credit, side. Increases in assets are recorded on the left side, debit, of the account. Decreases in assets are recorded on the right side, credit, of the account. Debit, credit. Right side, left side. 7. Rules for liabilities and owner's equity, on the right-hand side of the accounting equation. O liabilities and owner's equity, L and OE, have a normal credit balance, asterisk. O increases in L and OE are recorded on the right side. O decreases in L and OE are recorded on the left, debit side. Increases in liabilities and owner's equity are recorded as A, credit. Decreases in liabilities and owner's equity are recorded as A, debit. Rules of debit and credit summarized. Assets equals liabilities plus owner's equity debit plus credit plus debit credit plus. That is, assets have DR balance as positive, plus balances. Liabilities have CR balances as positive, plus balances. Owner's equity has CR balances as positive, plus balances. Accounting equation. Assets equals liabilities plus owner's equity. Rule of debit and credit, debit plus debit, credit plus. 8. The effect of accounting equation. 1. When an asset is brought into the business, DR, it affects the assets positively, plus or increases the number of assets, and when it is reduced or removed from the business it affects the assets account negatively, CR. 2. When a liability is brought into the business, CR, it affects the liabilities positively, plus or increases the number of liabilities, and when it is reduced or removed it affects the liabilities negatively, DR. 3. Owner's equity is affected by drawings, taking cash or goods for personal use, negatively, because money or goods are withdrawn for personal. Incomes and expenses also affect owner's equity. Incomes and additional investment into the business increase owner's equity, plus, CR, and losses/expenses, and drawings decreases owner's equity, DR. The following types of accounts, 1. Have a normal balance as a debit or credit and 2. Increase with a debit or credit. Normal balance assets liabilities expenses revenues dividends retained earnings common shares, debit, credit. Remember, debit expenses assets dividends, DED, all other accounts equals credit rules of debit and credit for shareholders' equity are slightly different since shareholders' equity is affected by different types of accounts. Common shares retained earnings dividends plus debit credit. Expenses revenues plus debit credit. Summary. Read the transaction and understand. Establish 2 account affected, double entry. 9. Establish whether those accounts are assets, liabilities, expenses/loss, or incomes. Establish which account is debited and which one is credited. Establish the effect of the 2 accounts on the accounting equation. Remember that if you keep your accounting equation equal, your books will balance.